His contact info to send out as well. So with that being said, I am going to hand it over to Miss Jude Anselmo from Beyond HR LLC.
Good morning, everyone. Thank you all for being here. Thank you, Stephanie, for inviting me to do this. And I apologize for the delay. I was having a little computer issue this morning. But anyway, here we are. And hopefully I'll give you some information today that you can walk away and feel like you got something out of this program. I'll start first by telling you who I am and a little bit about Beyond HR. My name is Jude Anselmo. I'm a partner and CFO at Beyond HR. I have over 30 years of accounting experience. Our company, Beyond HR, was designed to help small to mid-sized businesses and independent contractors. We do everything up to tax preparation. We do all the bookkeeping. We help you get everything in order so that when you turn your records over to your tax preparer, they are complete and accurate. Our goal is to help you maximize your deductions, save as much of your money as you can, and keep as much in your own pocket. And I think that's a good goal for all of us. We like to say that we work in your business at Beyond HR, free you up from the bookkeeping and the other stuff so that you can go out and work on your business and do what you do. Now, with that said, in telling you who I am, I also need to tell you who I'm not. I'm not a CPA and I'm not a tax preparer, okay? So the things that I'll share with you today, I'm going to advise you to get with your own tax preparer. They know your situation. Everyone's situation is different, and what might be right for one person may not be for the next. So I'll always tell you, get with your tax preparer. As the information that I'm going to give you today, there's a lot of it that's just good general business information. I'll try and gear it especially as much as I can to the real estate professionals. With that said, let's go. And the first tip I'm going to offer you this morning is probably one of the best. Keep business and personal separate. There's an old saying in life that says, keep your personal life personal. That couldn't be more true than in your business. If you don't already have it, you should have separate bank accounts. You should have separate credit cards. You keep your expenses and your receipts separate. You need to not fall into the bad habit of using your business card for personal expenses or using your personal card for business expenses. This creates a lot of problems. In addition to creating a cash flow issue for you and your company, it can cause your business records to be inaccurate by forgetting expenses. You may lose opportunity for deductions that you might have otherwise had because you spent it out of the personal account, forgot about it, and didn't capture it. If you go with the mindset of at the end of the year, I'll separate it all, that's just creating a nightmare and a headache that nobody wants. So best advice, keep your business and your personal separate. Next thing I'd say is let's look at your systems. You work with a lot of different systems throughout the course of your job. You probably have some sort of lead generation system. You want the systems to work for you. Like your lead generation system, you're going to have that designed so that the type of leads that you're looking for are what come your way. You're going to have some sort of follow-up system, how you follow up on those leads, how you follow up when you hear that someone might need your services. You're going to have, of course, your marketing systems. And with all of these, none can be as important as your financial system. You have to have a good financial system in place. And you need to make all of these systems work together, and you need to make them all work for you. My best advice when talking about your financial or your accounting system is give it a lot of thought up front. Think about what you want to get out of your bookkeeping or your accounting system, and that's what we need to get in up front. For example, as a real estate agent, you might be interested in tracking cost by listing. If that's something that you're interested in the back end, then it's best to know that up front because the system can be set up to do the work for you and pull that information out. So we want to get it in the same manner that you want to pull it out. That's something that Beyond HR can help you with. Maybe you have systems already established that aren't working for you. We can get with you. We can review the systems. We can help you customize and modify the systems that you have so that they can work the way that you need them to. Or if you're looking to set up a new system, we can help you with that. Once you've got your system established, you want to use your system and have it work for you so that you can maximize your deductions and minimize your liabilities. Most real estate agents will typically file their taxes on a Schedule C, 1040 form Schedule C. And this form, as you know, allows you to deduct legitimate business expenses. You're going to pay taxes on the net earnings. You're going to pay self-employment taxes. So with a good bookkeeping or financial system, we're going to capture as much of those expenses as we can. We're going to reduce your net earnings, thereby reduce your net taxes payable and your self-employment payable. Basically just what a good bookkeeping system does for you. So when we start talking about tax deductions and maximizing your tax deductions, you got to know what is deductible. What kinds of things are you hopefully taking advantage of? What kinds of things could you be if you're not yet? So I kind of put together a little list here of some of the things that we can talk about that would be tax deductions specific in your arena. So first we talk about commissions and fees. If you pay commissions or fees to anyone, that is 100% tax deductible to you. Here, the thing I would like to say at this point is be sure that you have a good system in place to capture the Social Security number or the employer identification number for anyone that you're going to pay, because if you pay an individual over $600 a year, you are required to file a 1099 on that individual. That information is what you would need, their employer identification number or Social Security number. So good practice is get that up front so you're not chasing that down at the end of the year. Home office. If you conduct business out of your home and you have a dedicated space in your home for a home office, you should be taking a home office deduction. Now there are a couple of options and some specific criteria that need to be met. This is where I would say get with your tax preparer, but the type of expenses that can be deducted on a home office deduction would include mortgage interest, depreciation on your home, utilities, maintenance, repairs. And how this deduction is generally calculated is based on the square footage of the space allocated for the office as a percentage to the total square footage of the house. And that relating percentage is then applied to those expenses, the mortgage, the utilities, the rent, things of that nature. So home office is definitely something that you should be looking at.
Jude, so we had a question that came in yesterday from an agent asking about whether or not she could address a tax deduction as far as being her home office, because she also hosts client events in the house itself. Is that something you could address for us?
Yeah, well, basically what the IRS would say on that is a home office has to be dedicated space that is used specifically for that. While you may entertain throughout your home, it's personally and primarily your home and what you do there. So taking a larger deduction for the house itself, the IRS would not agree that that's a legitimate expense. However, if you entertain in your home and you provide music, food, drinks, those expenses could be deductible and should be deducted as business expenses, meals and entertainment. Now, however, meals and entertainment has a limit on it. It has a 50% limit. So if you spend $1,000, you're going to get a $500 deduction for that. But as far as the actual home office, the IRS dictates that it needs to be a space that is primarily and only used and dedicated for that particular purpose.
Okay, so the home itself wouldn't be deductible if you're entertaining, but the entertaining cost would be deductible.
Correct.
Okay.
Correct. You couldn't make a case for the IRS that says, hey, all parts of my home, they use the bathroom, they go in the living room, I entertain out on my patio, so my whole home should be an office expense or a portion of it. The IRS guideline says it's regularly and primarily used for that. A home has all of your personal furnishings and belongings in it, and it's primarily used as your home. You may occasionally or oftentimes, but IRS would probably not allow that.
Okay.
Yeah, not a tax preparer, but that would be the interpretation of the rule.
Jude.
Yes.
This is Wanda. I had a question. If your home is paid for, can you still take out for your home if you're working from your home?
I'm sorry, if your home is what? I didn't hear the whole question.
Okay, say that your home is fully paid for.
Right.
I don't have a mortgage. but I still work from my home from time to time. Can I still, and I have a designated room and everything, can I still take out for my home?
Yes, there is, I think there is something, I'm not quite sure how it would be calculated. That's where I'd say get with a tax preparer, but yes, you still have utilities, you still have other expenses in the home. And I think in that instance, there may be some sort of, I'll relate it to like a standard mileage thing. There may be a standard level of value to the home that you could apply. That is, it's, you know, you can't be penalized because you paid for it. So I would talk to the CPA or tax preparer for that, but I would say yes.
Great.
Okay. Next I'm sorry, somebody else had a question?
No, I said on to education.
Yes, education and training. Any continuing education costs that you have, any registration costs, the materials, if you have to travel, any costs associated with the travel. Other types of things, if you hire a personal development coach, or you take any personal development courses, those things are tax deductible, and you should try to remember those. Of course, your advertising and your marketing, everybody knows that one. You know, your materials, your signage. This category is pretty broad with the IRS. Your business cards, your Facebook ads, your website costs, those things for sure. One thing that a lot of people may or may not think about and remember too is when you're staging a home, if you are providing food in the refrigerator or putting wine or hors d'oeuvres out, or if you put flowers out to make it look more presentable or more homey or whatever that might be, those costs can be deducted as well, home staging costs. Automobile costs, okay? This one is one that the IRS has a couple of different ways of doing it. You've got a standard mileage rate, or you have an actual expenses. And a good general guideline is if you travel more than 10,000 miles, 10,000 or more miles in a year, you're probably going to get the greatest benefit from the standard mileage. If you don't, then you might get the best benefit from actual expenses. And when talking about actual expenses, if you happen to buy the vehicle in that year, that tax year, you can take the taxes, license, and registration as part of your expenses. You get to take depreciation on your vehicle. You get to take fuel. You get to take insurance, any repairs or maintenance that you had to do on the vehicle. Car washes. A lot of times people don't think about it, but you can take car washes as an automobile expense. Again, it's going to be, do you use the vehicle for personal use as well, or do you have another vehicle available? What percentage of the vehicle is used for business versus personal? And it's kind of like they do with the house. You'll get that percentage of those costs as a deduction. The key for this deduction is going to be keeping accurate mileage records, okay? Here's where I would suggest you leverage technology. There's lots of apps that work on both Android and iPhones. Many of them are free. Use these apps to track your mileage. A couple that I know clients have used, I personally have not used it, but a couple that they've used are one called GoFar, G-O-F-A-R, GoFar, TripLog, and Mile IQ. Just a couple of them that are free that I know clients have used and had success with. And keeping in the travel category, any kind of travel, if you have to travel via airplane, airfare, car rentals, Ubers, taxis, hotel, parking, dry cleaning if you needed it while you were on travel. Don't forget tips. If you tip the taxi cab driver, the Uber driver, if you tip the bellman or the maid, remember those costs. They can add up if you do a lot of it. Those are eligible costs as well. Of course, communication, cell phone, fax line, if you have a dedicated office line, if you have an answering service, those types of costs you want to take. Office expenses and equipment. If you have an office, the desk, the computer, the iPad, the copy machine, any office supplies. If you have any sort of subscription services, if you do QuickBooks or any kind of bookkeeping services, those are deductible. Cameras, lock boxes, any type of stuff in your office. If you have a dedicated office space, if you serve refreshments to clients when they come in, those refreshments, if you put candy in a candy jar, if you keep water, those are deductible expenses. And of course, insurance and retirement, your health insurance, if you have an E&O liability insurance, your personal retirement cost. And here I didn't put it on there, but your accounting and your tax prep. Of course, those are tax deductible as well. Now, a lot of these deductions have IRS limits or special rules from the IRS. So again, that's why I'll say, talk to your professional, make those choices that are best for you. One of the ones I like to talk about and think about, particularly for real estate agents, quite often a real estate agent will give a gift to a client, okay? The IRS restricts or limits the deduction on that gift. I think currently it's $25 per client per year, okay? And as I mentioned earlier, business meals and entertainment have a 50% limitation on it. But if you think about how to leverage your deductions and where to gain advantage where you can, if you were going to give a client $100, let's say you're going to give a client a $100 gift. If you classify it as a client gift, then you're only going to get $25 deduction for that $100 gift. If instead you do a meal for a client and categorize it as business meals and entertainment and spend that same $100, you will benefit by getting a $50 tax deduction as opposed to a $100. So it's just little ways to think about how to maximize your deductions. And of course, in all of these instances, it's very important that you keep receipts. I think the best practice, I like to say, when you are spending, particularly for business meals and entertainment, you keep the receipt. Write on the receipt the client's name, the purpose of the business, keep it. Tracking receipts also for cash. Oftentimes you'll run about throughout the day and spend little things here and there for cash. You want to keep those receipts. Maybe you had to go have a key made at the hardware store or pick up something at CVS or Walgreens that was important for what you were doing. Keep the receipts. A good practice here again is leverage technology. Take a picture of it with your phone. Lots of software, I know we have clients in QuickBooks who do it. They can upload the picture right into QuickBooks. We see the receipt, I know exactly how to code it, and we capture it right there. So good business practice is capture the receipts on a daily basis. Don't let them get ahead of you, because over time, those little receipts tend to add up. And that's an advantage, a tax advantage that you might be missing. And though small, it's still your money and you want to keep it in your pocket.
How would you address restaurant gift cards?
Same thing. If you are buying a gift card for a client as a gift, you could classify it, like I said, as a client gift, or you could classify it under business meals and entertainment with the 50% limitation.
Okay, gotcha. And are there, as far as like receipt record keeping, are there any good apps that you would recommend out there right now that you see your clients use? Or
off the top of my head, there are several. I don't know. Most of the clients that we work with are in QuickBooks, and they do the photo app and just attach it, snap a picture of it and attach it. So everybody's got their iPhones with them. I could research some other apps, and when we send out the information, we'll throw that in there. Some other options that might be available. I'm sorry.
So I'm sorry, we had another one. Can you use 4 $25 gift cards rather than the single $100 gift card? Would the same rules apply?
If they're done to 4 different clients. If you gave 4 $25 gift cards to one client, you have to remember the restriction is 1 client per year. Per client per year. I think there's an exception to that. If it's a husband and a wife, you can do $50. You can make it 50 per, you can claim them as individuals, even though they might be a husband and a wife, okay. I think. But if you do 4 cards to the same person, you're still limited to the $25 per person per year. Okay.
That's interesting.
As far as having a good accounting or financial system, the most important reason is you need to know your business. You need to understand your numbers. You need to be able to look and compare year over year. You need to understand where you are at all times, particularly for tax purposes. You're probably doing estimated taxes. You want to know where you stand. The worst thing you can have is a surprise, and I'm sure it's probably happened. You are rolling along throughout the year. You're not thinking about it. You're maybe making your estimated tax payments, and you get to the end of the year and it's like, wow, I had a better year than I really thought. Darn, now I've got all these taxes that I haven't planned for. Or maybe your year's not going as well as you could and you've overpaid when maybe you didn't need to pay in so much. So on a tax planning basis, knowing your business is good. Just knowing your numbers, period. For any good business, you need to know where you are. And having someone, whether you do it yourself or you have a bookkeeping firm like us, having that connection between the accounting and the CPA, I think is another critical piece, because if you can have these two people or these two services working together on the same page to help you, that's where, like I said at the beginning, we start out by having the most money, you retain the most in your pocket. We don't want to pay Uncle Sam, we want to pay our fair share, but we don't want to pay any more than we need. Talking with Stephanie yesterday about the program and planning, I know that there may be a lot of questions on everybody's mind with the current environment that we're in, and what's the tax implications and how does all this work for the stimulus checks and the PPP and the EIDL and all these other things that have come our way recently. So I'll talk a little bit about all of them just to kind of give you, an idea of where things are with that. The stimulus checks, hopefully everybody got a stimulus check, okay? The stimulus checks are a refundable credit. Basically, the IRS has a couple of types of credits that you get. You can get a non-refundable credit or a refundable credit. A non-refundable credit means that if you have a tax liability, let's just say for sake of discussion, it's a $5,000 credit that you're eligible for. This is a non-refundable credit we're talking about. And we do the calculation and the CPA has determined that you're eligible for a $5,000 credit, but your tax liability is only $3,000. Then the credit is going to be applied up to the amount of your liability. And the $2,000 of unused credit, if you will, is just that. It's not something that you can benefit from. It's not something that's going to be refunded to you in a difference. Where this stimulus check money and refundable credits, like for example, child tax credits, earned income credits, if at that same example, the calculation was done by the CPA and determined that you were entitled to a $5,000 credit, your tax liability was only $3,000. The difference of $2,000 is refundable to you, and you would receive it as a tax refund. This stimulus check that you received is a refundable tax credit. It's not going to increase your tax liability. It's not going to reduce your tax liability. It's a credit that once all that is calculated, then the credit is applied, and if it's above what you owe, it is refundable. Basically, the IRS advanced it to you. Rather than wait for the 2020 taxes. So your CPA will have to, calculate that, figure that in, and I'll be honest, I don't know, and it's such a fluid subject that it's changing constantly. PPP and EIDL programs, I would assume that because those things were available to independent contractors, which I would imagine most of you are, you probably took advantage of those funds as well. The PPP, Payroll Protection Program, was designed for just that, to keep payroll flowing, keep people employed. It is eligible for forgiveness. There were certain guidelines into how the money had to be spent in order for the forgiveness. You had an 8-week period, and the 8-week period started from the fund's distribution date, okay? During that 8-week period, you needed to spend, or you need to spend 75% of that on payroll costs. And the other 25% was other expenses, specific expenses, which included mortgage interest, rent, and utilities. Now, health insurance at one time was discussed. As of late, in the most recent health insurance, personal health insurance is not one that would qualify as a valid expense in the 25% number. And just so you know, the 75-25 ratio is being debated by Congress right now. They may come back and change it. There's some discussion about lowering the percentage to maybe 50% for payroll so that the forgiveness criteria could be met. There's also some discussion about possibly extending the 8-week period so that it could be met. If You need to apply. The forgiveness is not automatic. If you've received a PPP loan payout, the forgiveness is not automatic. You will need to complete an application. The SBA has an application available, but you would probably need to check with your lender, because the lender will probably have their own form or some electronic version of it that they'll want you to complete. And there'll be some documentation I'm sure you'll need to provide. Each lender was different throughout the lending process, so I'm sure they'll be different throughout the forgiveness process on what they want as far as documentation. But it's not automatic forgiveness. Secondly, if the loan is not, or any portion of the loan is not forgiven, you are responsible to pay it back. It was a 1% loan with a 2-year term. That's the PPP. The EIDL, Economic Injury Disaster Loan, that was an SBA loan vehicle, 3.75% up to 30 years repayment. There was an advanced portion of that, a grant portion of that, that was coming out earlier to try and get some money into people's pockets. For businesses, it was determined as $1,000 per employee. That portion is considered an advance and is not anything that needs to be paid back. Like I said, on these loans and these programs, they're developing as we go. Mm-hmm. So the guidelines and how they'll be treated at tax time, what I've given you as far as information now today is basically, how it is today. It's subject to change tomorrow. As I said, Congress is debating it as we speak and trying to decide how they refine it.
Gotcha. We do have a stimulus check question. Okay. So if during all of this period you are going through a divorce and you wouldn't qualify being together, but come the divorce finalization, you do qualify for the stimulus check, how do you, is there a way to go about that process, or is it just kind of, it is what it is when you applied?
Okay, and I don't know for certain, again, I'm going to say talk to a tax preparer, but as far as divorce goes, when filing tax papers, if you are divorced within the year, then you file your taxes separately and individually. You had to be married in that tax year. So the income, I would think, I'm not sure I totally understand the question, but if the divorce is the issue, if the divorce occurred in 19, your stimulus check was based on 19 tax returns. But let's say your divorce occurred in 20 and you received the money in 20, then the money would be treated individually as it was a couple received each $1,200. Then you would take your $1,200 as the spouse, or file your tax returns with the complications and implications rather of your taxes and your income under your status. Okay. Single, head of household, whatever that is. And again, this is a good time where CPA comes in because everybody's circumstances are different. While I may be divorced, I may be able to claim a head of household status, which gets me the same benefits as a married person from a tax table standpoint.
Okay.
But the next person who is divorced would have to claim single because they don't qualify for head of household.
Okay. So because they're basing the stimulus checks on 2018 tax? 2019.
It was
2019. Okay.
If you had filed for 2019 already, okay, it was based on your 2019 taxes. If you had not filed yet, it was based on your 2018 tax situation.
Okay. So
that's where
whether or not you're married or divorced in those tax papers is going to determine whether or not you're eligible to get the stimulus check.
Correct. That's how the determination for who got it and how much you got was made. How it's trued up, if you will, in 2020, because remember the stimulus check was basically an advance of a 2020 refundable credit, okay? But nobody had filed their 2020 tax returns yet. So that's how the IRS looked at it, as a refundable credit toward your 2020 tax return. But we're going to advance the money to you so that you can use it now and not wait till you file the 2020 tax return.
Okay.
So when you file the 2020 tax return, and your status at that point is going to determine how the money's treated. It shouldn't be taxable to you though. because it's a refundable credit, okay? But how it's treated on your form, you're going to have to account for it on the form and show that you received it. Whether you show you received $2,400 or you show you received $1,200 is going to depend on how you file the form. But as far as adding it to income and being taxable, it's not, because it was a refundable credit. Okay.
And we do have another question from Miss Jane Tapp. I'm not quite sure how to word the question, so if you want to unmute yourself, Jane, and ask Jude, that would be great. I'm just not exactly sure what it's related to. Jane?
Okay, I'm not sure if I'm unmuted or not. Can you hear
No,
me?
you are. Yeah, we can hear you.
Okay, perfect. Good morning, everybody. Yes, I think you just said, I'm not sure on the loan that we have the potential to get. I have a friend that applied and she literally got $40,000, which all that sounds great until I thought I just heard you say 1% is great, but a 2-year term.
Okay, I'm going to say that I don't think she got $40,000 under the PPP, because the PPP, payroll protection.
I'm so sorry. It was the EIDL.
Okay, all right. So let me just clarify for anybody else, okay? The PPP, the max you could have gotten out of the PPP would have been $20,000 some dollars. I don't know the exact math. And the way that was determined was this, okay? The PPP was calculated based on two and times your monthly earnings, okay? But it was capped at $100,000. So $100,000 divided by 12 months is $8,000, 8,300, whatever the number is, math. I need a calculator, I'm sorry. But the 8,300 and some dollars times 2.5 months maxed out the loan at 20,000 some dollars. So she got the EIDL. The EIDL loan is 3.75% interest paid over 30 years. And the first year payments are deferred. In other words, you don't have to make the first payment until 1 year after you receive the approval and receive the funds. The interest is accruing in that first year, but payment is deferred for 1 whole year.
Okay, that sounds more understandable and certainly more choke on it in the next year. But I could swear that she said it said 1%. So I'm hoping she didn't. Okay, maybe she got to her emails mixed up or something. I'll tell her to go back and check her stuff, but more than likely it was at that 3.75 for a 30-year and nothing happening for a year. So, okay, got that. Thank you so much.
Correct. You're welcome. Yeah, the PPP is 1% with 2-year payback, but a maximum of 20,300 and something, or whatever the number was.
Okay, great. Thank you.
You're welcome. Anybody else with questions?
The PPP does not have to be paid back if you meet their certain criteria, or it has to be paid back whether or not over time.
The PPP has a forgiveness status, okay? If you qualify for forgiveness, you can have the entire loan forgiven. No tax consequence, no payback.
Okay,
basically,
as long as you meet that criteria.
As long as you meet that criteria. Now, you will submit the documents to your bank, whatever documents they require, you submit them to your bank. The bank's supposed to review and determine if you are eligible for forgiveness, that you've used the funds appropriately. Within 60 days, the bank then submits to the SBA. The SBA has basically been the guarantor on the loan. Once the SBA reviews what the bank has said and agrees with the bank that, yep, it's good, they're forgiven, then the SBA repays the bank, your note is gone, it goes away, you're done.
And do you know the specific criteria to meet the PPP forgiveness, or is that something it would be easier to just go look up online?
No, it's simple. The first, I mean, it's simple on the surface. The first criteria is that 75% of the money had to be used for payroll.
Okay.
The other 25% could be used for mortgage interest, utilities, rent, if you were renting, or hang on, I've got a note here. Rent, utilities, and mortgage interest payments. That's where the other 25% had to be used, okay? And you could have partial forgiveness. Mm-hmm. If you didn't meet the whole thing, partial forgiveness is available, is an option as well. And like I said, the Congress is looking, and this was during an 8-week period, and the 8-week period that they were gonna look at was from the time that the funds were first received 8 weeks from that date. So everybody's 8-week period. It wasn't like it was April 15th for everybody. Everybody's date was different based on when their funds were received. That'd be the look back period. And when you're looking at rent and utilities, rent, it had to be something from an obligation that was in place prior to February 15th. For example, you couldn't have been living somewhere rent-free, and then now you got the PPP, so you come up and all of a sudden you sign this new lease and you have this new rent, and you get to deduct that. They're going to require you to show that the rent was already a requirement prior to February 15th. You needed these monies to continue meeting your obligation. Therefore, you've met the criteria, we can forgive the loan.
Awesome. Okay.
Okay.
All right. I don't think we have any more questions. If anybody does, we are running a little bit over time, but
I'm sorry.
Oh, I'm sorry. We've got one more. So does the $600 the federal government adds on to Louisiana unemployment payments become a tax liability, or is it just unemployment in general?
It's all part of the unemployment in general, and it's going to depend on your situation, how that's taxable and so forth.
Okay. Awesome.
Okay.
All right. Well, with that being said, we're going to go ahead and close out the session for today. Again, we want to thank Ms. Jude Anselmo so much for joining us and giving us all these great tips and suggestions for bookkeeping and tax prep. If you guys have any questions, I will be sending out their contact info as well. They do have several real estate professionals as clients, so they are very well versed in this and experienced with handling these type of bookkeeping practices and accounting practices. So if you're looking for someone, I definitely recommend them. Kind of a personal plug, my sister, my younger sister actually worked for them for a while. So just seeing kind of the back end of everything and what they do, they're very efficient. They're very customer oriented. They'll return your calls very quickly. Super responsive, very down to earth, and they're not gonna, excuse my French, but there's no BS with them. So definitely a great company to work with, and some really awesome ladies running it. So go Power.
Thank you, Stephanie. We appreciate it, and Ashley was a joy to have with us too. We're glad she's back where she best fits and is happiest. But thank you all for the time and attention today, and hopefully I've left you with something that you can use. And we do offer free consultations. If you need anything, please reach out.
Awesome. Definitely. And we will have, I will be sending everyone's contact info to Jude and Melissa to follow up with you guys as well. So hopefully you'll be hearing from them soon. So for next week on the Bayou Connection, we've got a special hour-long series. We're going to aim to have these hour-long virtual panels once a month. Our first one is going to be a Stump the Attorney panel. So can you stump the Bayou title attorney? We'll have Brent Lalaberty, President and CEO of Bayou Title, joining us, as well as Rachel Williams, our Baton Rouge and Zachary office attorney, and Thomas Hamaway, who runs our Shreveport and Bossier City offices as the attorney up there. So if you have any legal questions, or if you have kind of a crazy real estate scenario you want to run by them, or if you just want to share a crazy story and see what their take on it is, or you can give them a question and try to baffle them. So it's kind of more of a casual one-on-one title talk sort of panel that we've got going. So feel free to join us then. We'll be having that link going out along with the recap for today. So hope you guys can join us for next week. And thank you again for joining us on the Bayou Connection today. Y'all have a great day.
Bye-bye.
Thank you.
Thank you.